Hello everyone. Good afternoon. Hope you all can hear me. Can everyone hear me?
Yeah, we can hear you.
Okay. Thank you. All right. Okay, today we are going to talk about a lot of things. We are going to really dive deep into this new tax reform. You understand? So, but first off, I would really like us to wait for some more people to join. I would really like us to wait for some more people to join. You understand? So let's just give them like 5 minutes. Let's say 5 minutes, and then we kick off. Thank you so much. Okay. So, welcome everyone. Good afternoon, everyone. Welcome to this month's brand series titled "The New Tax Law and Your Business." Yeah. So, my name is Okechukwu Joseph, and today we are here because of the new tax law ushered into the Nigerian system. You understand? And we are going to like have a deep dive deep dive about it. You understand what it entails and how it can make or mar your business. So, a quick backstory as to why we chose this topic here. This okay. First off, this year in June 2025, the new tax law was signed into the Nigerian system by our president, President Bola Ahmed Tinubu. Actually, it pissed off a lot of people. People that it pissed off a lot of people, both those who understood it and those who didn't. You understand? So in the office, we deliberated about it. So it was actually funny. You understand? Because there was a lot of listen to me, and you don't understand that kind of thing. There were moments like that. So, but our boss, a man that I respect so much, in the person of Mr. George Naduzi, he said he was just actually laughing at us because he knew something that we didn't. He knew something that we didn't. So he decided to enlighten us all by bringing in today's speaker to talk to us about it. Because just as we were arguing about it in the office, you understand, there are also people whom this tax reform will be benefiting or are benefiting, but because they don't understand it, they are angry about the reform. You understand? So before we meet our speaker today, a quick note as to how this session would actually flow. We'll have a talk. We'll have a focus talk by our speaker, and then we'll have a Q&A session afterwards. Understand? So now, having said that, I want to quickly rewind I want to quickly rewind back to our last brand series. So our last episode, we looked at data and how it helps you grow and make good decisions in your business. So we hosted Ms. Namani Daberechi, a data analyst, consultant, and business strategist. She's the founder of the Data Immersed Community, TDI, and she walked us through how entrepreneurs can use data to determine business success and make sure that they hit their goals. So that conversation actually really mattered. You understand? Like it was really superb. It mattered because the sustained business success depends on the amount of data you have on your customers and how well you can use that data to convert into results. You understand? So enough of the long talk. Yeah, enough of the long talk. Let's meet our distinguished speaker for today. She's a chartered accountant, a tax professional for SME, for SMEs, and a financial accountant for LFG. Please let's make welcome Miss Onyema Miracle. Miss Miracle, are you here? Okay, so she just joined in. Okay. Miss Miracle, please, yeah. Okay, please unmute yourself and speak. We can't really, I think you're muted. Hello? I think you're muted.
All right.
Hello?
Hello. Good morning.
All right.
All right. Thank you for inviting me to speak on this topic. Can you see me?
Yeah, we can. Go ahead.
So we are talking about the new tax laws and how it will affect our businesses. So first of all, let me start by saying that the subject is not that complex to get. If we follow through the whole teaching of this afternoon, will get the point. It's not that complex. It's something that can be done. So let's get right into it. Secondly, these tax laws were not set up to frustrate any business or frustrate individuals. Do you get? So basically, these were set out to help businesses organize themselves first, then help you account your profitability. Do you get? So this is the purpose of these tax laws. So these tax laws were rolled out that it will be implemented by January 1. And there were basically some new laws that affected personal income tax, company income tax, value added tax, withholding tax, which is still under deliberation. You get? So let's start from company income tax. Before now, company income tax used to be 30%. But after the whole resolution, it was reduced to 25%. 25% on 25 million revenue yearly. That is, if your business makes up to 25 million revenue on a yearly basis, when you remove the taxable and non-taxable expenses, then you'll be charged tax on what is remaining. But what gives you the right to be charged first, that 25%, is if you are earning up to 25 million naira revenue on a yearly basis. You get? So that is what makes you eligible to be charged this tax. Hello?
Go ahead. Go ahead. We can hear you.
Okay. So this one I just said now will affect big businesses, large companies. That is what they will pay. They will pay CIT, 25% tax, and all of it. So if you don't earn up to 25 million naira revenue, what you are paying is minimum tax. You are filing for other forms of tax. 0% tax. So, but there is something significant about all these things. Some of small businesses registered as business name and all of it. If you register as a business name, you are not under business. Do you get? You're not under business. You are under personal income tax. You'll be charged personal income tax. Do you get? So, except you are registered as a small business or enterprise, that is when you now fall under business and systematically avoid tax because you registered as a business. So the first takeaway we are going out with today is if you own a business and you are still under business name, find a CAC office around you and upgrade to enterprise. So whether you're earning up to 25 million or not, upgrade up to enterprise so that you'll be on a safe side. So now let me cite a scenario for you. If you own a business and you are earning, let me say, 5 million revenue per year, and you are still registered as business name, the threshold of 800,000 falls on you. You will pay tax for that. But if you enhance your business to enterprise, increase it, join the major CAC body and become a small business owner, if you are making 5 million revenue, you see that you will not pay tax for the year because you've joined business, you've joined small business. Do you get? So that is the first thing I want us to take away with this afternoon. So if you own a business and you've not yet increased yours, please, after this, do well to do that. But even if you have a business and you earn up to 25 million revenue, I think you're on the safe side, because 25%, it was reduced from 30% to 25% first. Secondly, there are some tax exemptions that will reduce your tax charge for the year if you meet an accountant that knows what they are doing. Do you get? So they will help you prepare your account in such a way that there will be some exempt. Then those people that are not paying, that are paying minimum tax, there are other levies that you pay in your state and all of it, charges that they charge you, maybe VAT and all of it, if you are directly selling to consumers. Are we still following?
Yes,
Are
we
we still
are.
following?
Yeah, sure.
Okay. So if you are directly selling to consumers. So from this company income tax, since we've gotten to VAT, let us move to value added tax. I think from what I've said so far, you've grabbed this company income tax to an extent. So VAT applies to companies that produce goods and services, except companies into education, pharmaceuticals, medical, and agriculture. So these companies are tax exempt. But lately, it was changed. Now, before, let me explain something for you. See how it happens. Let me use gala as an example. Now, for tax, for production, they pay VAT to the manufacturers of the products they are using. Do you get? So they buy it, they calculate it, they keep it, they produce, then they sell. When they sell, they put that VAT to your bill. That they put it inside their sales price. Do you get? Then you, when you buy, let me say for example, the gala is 15 naira, or okay, 100 naira. You buy gala 100 naira, then you still pay 7.5 tax VAT on that gala that you're buying. Are you following? So you still pay 7.5 tax. So if it is 100 naira times 0.075, that is what you will now pay for that gala. So, but lately, government is now considerate on consumers and producers, because the person now bearing the whole burden of VAT is now the consumer, because you bear the one they bought from the manufacturers, you bear the ones they incur during production, and you also bear the ones that they pay to the government now. You get? So the government now said that they should not put it aside the sales anymore. The VAT that they incurred when they went to buy their production materials, that the government will pay them back. You get? So that is it about VAT. So, and it's been advised, first, please keep good records of your business. Keep good records of your business. Whatever it is you buy, whatever it is you sell, whatever it is, if you once you upgrade to small medium enterprise, that's SME, and you register and get up to enterprise and all of it, if you can get an account that is different from what you used to have before, let it have a company name that is stable, so that you can be very much organized, and the government will not come and be chasing you around. Because to an extent, if you don't, okay, we'll come to that. What will happen when you don't keep to these laws? We'll come to that. So keep your records. Whatever, if you are still vague about how to keep your records, I'm an accountant. You can hit me up later so that we'll talk about it. You meet an accountant that is close to where you are, that knows what they are doing. They can help you keep your records very well, so that you will not be running around. The burden of tax issues falls on the ignorant. If you don't know what you do, if you don't know what you are doing, that's the people that bears most of the loss of this whole tax that we're talking about. So, but if you know what you are doing, you will see that you will be on a safe side. Are we following?
Yes, we are. We are.
Yes.
Yes, we are following.
Hi, Miracle. Are you still there?
All right.
Okay.
I'm
Okay.
sorry. I'm sorry. Sorry for that. Meet an accountant that will help you put these things in order. Have a sales record, purchases record, because the one of the laws that was passed is that for every VAT that you pay, you will put up your sales record on Tax Pro Max. Do you get? You put up your sales record. So you need to have something that is comprehensive so that the government will see it the way it is. But there are ways to reduce tax. You will not run away from it completely. You have to pay because it's our obligation to pay tax to the government. It's our obligation to pay tax to the government. Even though whether it is being used or not is the obligation of citizens to do this while the government do their own. Yeah, so first thing first, keep your records up to date so that whatever happens, you know that you are up to date. If you have any questions, we will entertain questions at the end of this and you ask me. That is it about VAT and company income tax. Now, the most confusion that is online everywhere is this 800,000 threshold. That is the question everybody is asking. Do you mean that? And 800,000 threshold is like 70,000 per month. So people that are earning 200,000, are you trying to say that the tax is resting on our head and all of it? That is the question everybody's asking. What are we doing? So let me do my best to do an explanation on this personal income tax and how it will work. First of all, personal income tax is charged on income earned. Is charged on income earned. It's not if you pass money from your account to another account, it will be charged as personal income tax. No. Because I was reading something like somebody was saying that POS people that are passing cash from here to here, would they be charged and all of it? No. Income you earn through bank. So this whole thing is working through bank. Your salary, the gifts people give you, revenue from your business, maybe people that are doing online trading, crypto, YouTubers. Yeah. So these are the revenues that will be taxed. So now let's get to the 800,000 threshold. First of all, personal income tax is a progressive tax. It's not static like company income tax. The company income tax, whether you earn 100 million, 1 billion, you'll be charged 25%. That is the threshold. So, but personal income tax is progressive. They don't charge everybody the same thing. They charge according to what you earn. But what we know that is that once your income is above 800,000, you'll be charged tax. So let us now look at the difference in percentages. First, 0 to 800,000, you are tax free. You will not be charged tax. If your yearly, everything that people give you, everything that you earn in a year is 800,000. You summarize it, calculate everything, 800,000. No tax for you. You're not being charged any tax. Once it is between 800,000 to 3 million, between 800,000 to 3 million, between 800,000 to 3 million, you'll be charged 15% tax. 15% tax. So if you are earning 800,000, 900,000, 1 million, 1.5 million, 2 million, 2.5 million, 3 million, 3 million, you'll be charged 15% tax. I'll still explain where it will be charged on. Do you get? So it's not the whole 3 million that they will collect your money from you like that. No. Then between 3 million to 12 million is 18% tax. 18%. So they charge 18% on 3 million to 12 million. So if you see something that is more than that, if you are being charged something that is more than these percentages that I'm calling for you, that is when you will now say that this is wrong. I'll tell you what to do if you find out that it has happened. Then 12 million to 25 million is 21%. 25 million to 50 million is 23%. 50 million and above is 25%. This is for salary earners, income earners. I will not call it salary earners, we call it income earners. You registered as a personal income owner. Let me say maybe you work for the government, you work for oil company, you work for yourself, or your business is still registered as a personal, as just business name. All these people fall under personal income tax. You are a YouTube content creator and Facebook content creator, you're a crypto trader, all these things fall under personal income tax. So if your threshold is between 800 to 3 million, 15%, 3 million to 12 million, 18%, 12 million to 25 million, 21%, 25 million to 50 million, 23%, above 50 million, 25%. You get? So no tax for low income earners. That is the first time. That's the first time first. So oh God. So let's continue. Now, the next thing I want to talk about is there is difference between income earned and taxable income. Income earned and taxable income. So it's not your whole 1 million that they will charge 15% on. So maybe you're already calculating in your mind 15% of 1 million is what. So this will take away so amount of money from my account. No, it's not how it is being done. There are some things that will be deducted, some expenses that will be deducted, some incomes that are, so we call it allowable expenses and non-allowable expenses. Some are allowed, some are not allowed. You get? Some income are allowed, some income are not allowed. You get? So sometimes you might, so the way I just explained it now, you might want to pack up expenses, pack up a lot of expenses so that you can reduce it. In the long run, if you take it to an accountant, they'll tell you that these ones that you put are not allowed. If you take it off. So by the time you take off all these things, take off all these things, your tax will still be much. So how to reduce your tax is to use the knowledge you have about allowable and disallowable expenses to reduce your tax burden. So now, in this tax, we have tax evasion and tax avoidance. If you evade tax, it's a crime against the law. If you avoid tax, it is using the law to reduce your tax burden. Do you get? So that is it. Now, let us go over to what makes up taxable income. Taxable income is total income after allowable deductions. Total income after allowable deductions. There are some reliefs, there are some deductions that will be made before we now say this is what will be taxed. Now,
Hello, Miss Miracle. Okay.
yeah.
I think your network is really it's really disturbing you.
So now we'll discuss about expenses that are allowed to be deducted from your tax record so that you reduce your tax burden. Allowable expenses and non-allowable. For businesses, you must incur expenses. Expenses incurred for the purpose of the business directly are allowed. Expenses incurred not directly related to the business are not allowed, or to yourself. Okay, let's go through it. For example, for businesses that are still under personal income or maybe company income tax and all of it, operational expenses. These are allowable. I think you should pay attention to this allowable. Pay attention to this allowable now. Rent that you pay for your office or your shop is allowed. Electricity, water, internet is allowed. Transport, delivery costs, all these things are inside production costs. They are allowed. Office expenses, they are allowed. Business phone calls and data, they are allowed. Advertising and marketing, they are allowed. Bank charges on your business account, they are allowed. Salaries and wages, they are allowed. Bonuses and allowances on staff, on your staff, they are allowed. Pension contributions, they are allowed. Staff training and development, they are allowed. Medical allowance for staff, they are allowed. Raw materials, packaging materials, cost of goods purchased for resale, manufacturing expenses, they are allowed. Do you get? Professional fees, the audit fee maybe you pay, or the fee you pay to an accountant or to a lawyer for the sake of your business, they are allowed. Business registration fee, take note of all these things, please. They are allowed. Bad debts that are proven not to be recovered again. What is bad debt? You sold goods to somebody and the person doesn't pay, and it's looking like the person cannot pay again. Maybe the government has declared that person back. Once it gets to this point, you know that it has gotten to bad debt. So these ones are allowed. Do you get? So repairs and maintenance on purpose of assets. Repairs and maintenance on purpose of assets. These are allowed. The ones that are not allowed are expenses you made on personal purpose. This is for businesses. So on personal purpose, they are not allowed. So that when the whole calculations will start going down, or they will start making deductions and all of it, you will not be like, no, now you are meant to do this, you are meant to do this. These are laws set out by FRS. So the people that are that know about it, they've read about it and they've set it out already. So you will not start saying, I didn't know. Ignorance is not an excuse in the court of law. So expenses that are incurred that are not directly related to the business are not allowed. You took money from the business to go for vacation, is not allowed. Do you get? Personal rent, personal travel, personal vacation, personal food, personal lifestyle, personal expenses, they are not allowed. Property, long-term assets, they are not allowed. Just that for those assets, they claim capital expenditure. You claim capital allowance for those capital assets. you claim capital allowance. Do you get? So, but you cannot come and put it inside your expenses under the tax that you bought table and you will not deduct it, let it reduce your tax. No. Or that you bought car, let it reduce your tax. No. All these assets will not reduce the tax, but you will claim capital allowance on it, depending on the year of survival of that asset. That one is a different case altogether. An accountant will help you sort it out. These are the things that will help you reduce your tax. So that you will not prepare something that you prepare and you get there, they will not tell you that. And you know, at that point, you are no longer, let me say, you are now at the mercies of whoever is preparing the account for you. So that is it. Fines or penalties or that you are being charged on the business. For example, you didn't pay for emblem for your car or something like that, and you are being charged fine for it. It's not allowed. You are being charged penalty for not paying tax on time. It's not allowed. So these ones are disallowable expenses. Making provisions for bad debt that is not specific. The one I explained earlier was bad debt that you know that you cannot recover again is allowed. But setting out an amount of money and say that I'm keeping it so that in case the person doesn't pay, you understand? You know, people can put these things up so that they will reduce tax. It's not allowed. Provision for stock, provision for future expenses, they are not allowed. Depreciation, they are not allowed. And so these are the things that you will note. You get? These are the things that you will note in your business, so that even if you did not go and even if you are enterprise, you are still under business name, these are things that you take note of. Do you get? These are things that you take note of so that you will be equipped with knowledge. Are we still following?
Yeah, sure. Yeah, sure.
Okay. So now, when it comes to personal income tax, we just finished that of business. Now, for your own personal money, that we talked about 800,000 and all of it, that threshold that we talked about. I hope you are still keeping up to that. So on that one now, there are statutory allowable deductions that will be allowed for you to remove. Those that work under government should know about this already, because the government, they've been doing it for government workers earlier before now. So now they want to do it for both private people that work for private companies that are not paying tax, and people that work for themselves that are not paying tax. Now, pension contribution. Pension contribution is deductible by tax. What is pension? Pension is money that you set aside that you want to spend in the future. That if you work for, let me say, if you're working for a business and your salary is meant to be 100,000, maybe they pay you 80,000 and keep 20,000 aside, so that when you retire, you will not go empty-handed. They will put it into another salary, depending on what they agree on. They might decide to pay you the whole money once, or they will pay you for an amount of years in the future. So pension contribution is allowed. Then National Housing Fund, reduce taxable income. The rent relief, if it is not up to 500,000, you put it to reduce your tax. These are allowed. If your rent is 300 to 400 to 500,000, you put it to reduce your tax. What you get? Health insurance. Health insurance. Setting out an amount of money for your health. We have National Health Insurance, NHIS, approved by the government hospitals. Maybe you go there, you buy their card, and you pay a certain amount of money. That money that you pay for your health insurance is allowed. Life assurance premium. Assuring your life, so that if maybe when you die, your children will have something to hold on to, amount of money to hold on to. That is life assurance premium. So that premium that you are paying on a yearly basis for that life assurance is allowed. It can help you reduce your tax. So on rent that I talked about 500,000. Now, the new tax structure says that 20% of your annual rent is allowed if it is not up to 500,000. That is it. Let me clearly explain what I'm saying. If you pay rent of 500,000, it's like between 0 to 500,000, you will take away 500,000. If it is above 500,000, what you can remove is 20%. So you will not check the two and know which is higher and know how you place it. Because if you pay 1 million rent and you do 20% of 1 million, 20%, if you do 20% of 1 million, you see that 500,000 is higher than 1 million. So it's better you claim 500,000 and leave you 20% first. You get? Are we still following? So that is it. About that.
Yeah.
Okay. Now, for personal income, that is what we are still explaining. If you are self-employed, if you are running your own business by yourself, and you run expenses that are directly connected to your business, those ones are allowed. But if they are not directly connected to your business, tax officials will not allow it. What does this mean? For every expenses that you run, for every payment that you make, because that is what will help you in this whole, is those expenses that will help you reduce your tax. That is the truth. They are what will help you reduce your tax. So for every expenses that you make sure you have a receipt. Because when tax officials come to run tax audit or tax investigation in your company, you not use amount and be telling them that I paid rent of this place 3 million or this amount. You have to show them a receipt that shows that you really paid for this. So which means this new year it is telling us to keep appropriate records. I'll keep saying it often and on, because any record that cannot be traced will be removed. They will, by their own way, remove it because they cannot trace it. They cannot place their hand on. So it's either you have a bank statement or you have a physical receipt for it, or you snap the receipt and keep it. So every record that you have after preparing the account and all of it, and it's being asked, so where are the receipts that shows the source documents that shows that these things are true? You bring it out and show that they are true. Okay, so that is what it means. Expenses directly to the business for whatever amount it is. Keep a record. You get? Keep a record. For personal lifestyle, if you buy clothes, that is in your personal income. If you buy clothes, you buy food, buy makeup, enter transport, give gifts to your family and friends, entertain people, you cannot deduct it. If you buy car, buy laptop, buy phone, buy house, renovate your house, it's not allowed. You cannot deduct them. You get? So you will now, from what you've written, know how you will organize these things from next year. You get? So that you will be on a safe side. I'm not saying that you shouldn't pay tax. You will pay tax, but you pay a reasonable amount that will not drain your business. And as it is not draining your business, the tax body will not come after you. That is just I think this is the major reason we are here. So that you will know what and what to look out for next year. Then, as you are looking out for them, you are reducing your tax. And as you are reducing your tax, the government will not come after you. That is it. So, and if you choose not to do them, maybe for a while you will go scot-free and all of it. But when they become serious, what if they become serious about it? And FRS now takes laws into their hands and they do the tax audit by themselves and now give you a particular amount of tax and all of it. And at that point, you will now have to start going to get a professional accountant or getting a lawyer that will help you to put everything in order So the FRS will look at it again and say, okay, or you now pay this amount that you just prepared. Are we still following? So these are the things we consider. These are the things that we consider. Now, loan repayments are not deductible. Loan is not an income. It's not considered as income. Repayment is not considered. You know that in business, if you take loan, you put it inside your declaration of statement of what the business owns. You put it there. Interest on loan for businesses reduces tax for business. That's why I'm saying that if you've not increased your business, if you've not done this enterprise registration, please do it. Okay, now interest on loan for businesses reduces tax. You put interest on loan inside the expenses that will reduce your tax charge. Okay, so if you take loan for your business, it can reduce your tax burden. But for personal income, it will not reduce it. It's not even considered as income. The interest you paid on it is not considered as expenses that can reduce tax burden. So if you take loan, you're on your own to get soon. So that is it. Now, donations to government approved bodies are allowable. Government approved bodies are allowable. NGOs, non-governmental organizations. There are a list of non-governmental organizations approved by the government. Donations to those bodies are allowed. And this is another way to reduce your tax burden. As if for a personal income earner, is another way to reduce your tax burden. If you donate money to an NGO, that is part of it. Let me give you an example let me do a quick analysis of both personal income tax and company income tax so that you understand everything, just an overview of everything. Let's use somebody that earns 3 million per year as an example. Have it in mind, 3 million per year as an example. The person pays pension 100,000. We put it 100,000. Pays health fund 20,000. That's 120,000, right? Now the person pays rent 600,000. Do you get 600,000? Now only 20% of that 500,000 is allowed. We now do 20% of 500,000, you get 100,000. So the first 100,000 plus 20,000 plus 100,000, that's 220,000. The person pays life assurance 50,000. That's 270,000. Person now buys clothes 150,000. Is not allowed. The person went for vacation 300,000. Is not allowed. So what we just calculated 270,000. So 3 million minus 270,000. What is remaining of it is 2.730. 2720 that is remaining. 2730, sorry, that is remaining. Is that 2730 that will now be charged tax on? That will be charged 15%. That's 2,730,000 that will now be charged 15% tax on. Are we still following? So that is it.
Yes, we are.
So that is what we will be charged. Then for company income tax. For a company that ends up to 25 million and all of it, you do this analysis as well and know what will be removed from it. For businesses, if you don't have an accountant that knows your business very well, please hire one. Or you educate the one on ground. If you cannot hire another one, that is not a problem. Educate the one on ground so that you will have a comprehensive documentation of all these things and somebody that can defend the business if issues come up. That is it. If you don't have an accountant yet, hire one. If you have one, educate that one. Send the person for trainings and all of it so that your business will be on the safe side. If you are the only person handling it, train yourself. Train yourself. You get? You can hit me up. I can help you and put up your business in correct order if you want to. And you'll be grateful you did. Again. So if you have questions, you can ask if you have questions. So I think I've exhausted what I have.
Yeah, I have a
Okay,
question.
okay. So, okay, there will be a question and answer Q&A session in a bit. But I just want to say thank you so much, Mrs. Miracle. Thank you so much, Ms. Miracle, for the explanation. Honestly, this is actually one of the best explanations I've actually heard about this tax issue or this tax topic, because before I did not really think about it much. You understand? I think I was overthinking it again, but now it's a bit clear. You understand? It's a bit clear. But having heard this, I also want us to hear from my able MD. You understand? The one that made all this possible. You understand? The person of Mr. George Nadozi. So, sir, you have the floor now.
Okay, thank you so much, Miracle. Thank you so much. That was a very very powerful session. Because when it comes to tax, to be honest with you, a lot of business owners, even a lot of individuals, they are confused, they are worried, and we have a lot of informations flying online. We go to Facebook, we see a lot of things, and when we get a lot of information without direction, we kind of get confused. So I'm not going to be wasting our time, because I really want us to dive into the question and answer section, so that because I know so many of us here have questions to ask. Yes, so I'm just going to brief. I'm just going to just do a little brief. All right. So this is the last month of 2025, and 2026 is almost here. And I want to share with us what business owners must start doing right now. Like, what I'm not trying to tell you what you should start doing in January 2026. I'm not trying to tell you to start a new year resolution. Yes, I'm not trying to, give you a new year resolution that you can start in 2026. I want to share with you just a few things you can start doing right now, so that you can dominate 2026. Number one is to build a brand, not a business. What differentiates building a brand from building a business? When you are building a brand, it means you are building something people can trust. You are building something people can connect with. You are building something people can remember. I will always use Samsung and Apple as an example. A lot of persons are emotionally attached to either Samsung or iPhone. And so whenever Samsung releases a new device, or whenever Apple releases a new device, even if Apple decides to remove charger, they decide to remove USB-C from their new device, you will see these guys defending Apple, calling it innovation, right? Even when something functional is being removed, even when food is being removed from their table, it's innovation. Do you know why it's innovation? Because it's Apple that is doing it, right? So you must come to that point where you build something that people can, get emotionally connected with. And one of the ways to do that is to establish a very clear identity and positioning. Yes, you must establish a very clear identity and position. Like I said, I'm not going to be wasting our time. Maybe after this, if you have questions around branding, because that's what we do at BrandForge. So if you have questions around branding, if you want people who can help you, reposition your brand, we're right here. And the amazing thing is that you could get a free consultation. So Establish a clear identity and positioning. Then control perception through consistent messaging. So let me explain this. What do we mean by controlling perception? Controlling perception simply means being in charge of what people believe about your product. If you are not in charge of what people believe about your product, then someone can wake up tomorrow and say your business is a scam. Let me give you an example. Do you remember when people don't like OPay? There was a time people don't like OPay. There was a time people will tell you once you use OPay, OPay will steal your money. Once you use OPay, OPay will do this, OPay will do that. But today, so many people, in fact, today, so many people, once you talk about secure transaction, once you talk about secure banking, a lot of people think of OPay. Once you talk about instant transaction, people talk about OPay. Do you know why? Because OPay has consistently, pushed this narrative that when it comes to instant transaction, that they are the best. Of course, we know that there are others. There is Money Points. There is, to shock you, there is Kuda. Kuda has been doing some of these things OPay is doing, right? Even before OPay became popular. I know so many banks, some of these fintech wallets I was using then. When you send me money, even before I get the alert, I know whether you've sent the money or whether you've not sent the money. If you send the money and network is still giving problem, I will know. So these things were already in existence even before OPay came. But why is OPay strongly associated with secure banking? Because they were consistently pushing that message. They're not telling you come and bank with us. They're not telling you, they're not trying to just give you that same message that every other bank or every other financial institution is giving. They are trying to paint a particular picture for you. Jay, please, once my time is over, let me know. And then number 3, you must begin to tell one
All right,
story.
sir.
You must begin to tell one story. Begin to tell a story concerning your business. Begin to tell a story. So that story could be the vision. So the story could convey the vision behind the brand. It could convey, it could, maybe it could be about the solution that the brand is solving. It could be about how your business is changing lives. It could be, so just make sure you are telling a story about your business, and this story should be everywhere. You must tell that story online, you must tell that story offline. That story should be in the minds of your customers. So even along your customer journey, you must have a way that you make sure that all of these things remain in their mind. And let me tell you, once you start doing this, one by one, you are actually embedding a perception in the minds of your customers. Then finally, I have a lot of things here that I'm supposed to share, but we don't have time. Finally, you must become aggressively customer centric. Let me tell you the truth. One of the reasons why we're doing business is to make money, to make profit. If at the end of the day your business is not making profit, you are wasting your time. No matter how innovative you are, no matter how wonderful your brand is, if your brand is not making money, then you're wasting your time. But one of the ways to make money is to be customer centric. And when I say be customer centric, people think I'm saying be chasing after customers. No. When I say be customer centric, I'm simply saying you must understand your customers more than your customers understand themselves. Remember, some of your customers don't even know that they are having a problem. And the purpose of your brand, the purpose of passing a message is to educate your customers or educate your potential customers, make them know that they have a problem. Some of your customers don't know they have a problem. Yes, they don't know they have a problem. They don't know that. That is what we call brand awareness. You first of all get them to that point where they realize, oh, that's true. I really have a problem. Oh, that's true. This is why I'm not doing this thing like this. Oh, that's true. This is why I'm not getting this result. Let them know, so you must understand your customers more than they understand themselves. And how do you do that? One of the ways to do that is, number 1, you must talk to your customers every week. Make sure you're talking to your customers every time. I wouldn't say every day. Make sure you're talking to them indirectly every day via Facebook, via indirect channels where you don't kind of invade their privacy. But you are permitted to invade their privacy at least once a week. What do I mean by invading their privacy? Make sure you are getting their contacts, make sure you are getting their emails, find a way to get to them every week. And when you are getting to them every week, don't send your customers WhatsApp message or email trying to advertise anything to them. Send them emails or messages that educate them. Your customers should be able to get certain level of value for free. I keep saying that. Your customers should be able to get certain level of value for free. Do you know why? So that they can come chasing after you. You shouldn't be the one chasing after your customers. When you are chasing after your customers will run away. Sorry if you're a Jehovah Witness adherent here. Sorry, I'm not saying this in a bad way. If you are walking on the road, for example, and you see someone carrying bag, carrying umbrella, and you are in a haste, you are trying to get to work or you're trying to get somewhere to a meeting, and someone is carrying umbrella, holding awake and approaching you, because you are in a haste, you will cross the other side of the road. You will zoom off. Or if they are coming into your office and your door is open, you will quickly close the door so that they don't come in. Why? Because it's more like the person is chasing after you. Or if you see some of these network marketers, this GNLD and all of that, and they are coming towards you and you know that you don't have time, what do? You are almost literally running away. And this is what happens when you are chasing after people. So every single time you're telling them, come and buy, come and buy, come and buy. Why not change your messaging from come and buy to this is what will help you, or this is what you need? You don't even have to tell them to buy anything. Let them see what problem they are having, and let them see that you have the solution to the problem they are having. They are the ones that will come to you and say, please, help me solve this problem. So talk to your customers every week. And number 3, as you're talking to your customers, track their behaviors. Stop selling on assumption. Stop selling on assumption. Do you know why? Do you know how Facebook gets to show you different types of ads? Because they are tracking your behavior. Just as we were talking about tax, I went online and I saw an advert of an accountant talking about tax. Just right now, I went on Facebook just right now, and I saw someone talking about tax. I saw someone, I wish it's still open, I would have shown you. I saw someone talking about tax. So Facebook is tracking your behavior and using it to present certain things to you. You also can learn how to track your customers' behavior. And then number 3, use data to predict what your customers need. Use data. Last time we talked about data analysis. Use data to predict what your customers need. And finally, deliver personalized experience. Your customers should be able to have, the experience should be personalized. It shouldn't be generic experience. Yes, it shouldn't be generic experience. This is one of the reasons why we talk so much about branding. This is why we talk about differentiating your business from the rest. Because we live in a world full of noise. We live in a world full of noise. If you enter on the Shaman market, especially now that we are in the Christmas season, everybody's saying, come and buy, my color, come and buy, come and buy. Everybody's saying, come and buy, and you are confused. People are confused. What differentiates you from the other business? If these are 2 products, let's say that these 2 things are the same product, right? And these 2 things are presented to you. Why should you leave this one to buy this one? Or why should you leave this one to buy this one? Always ask yourself that question. Why should my prospects leave the other product and buy my own? Once you discover why they should leave the other brand to buy your own, start emphasizing on that thing that makes you different. If you are selling hair, start emphasizing on that thing that makes you different. And if you've asked yourself this question and you are not able to discover what makes you different, that means there's a problem. So you need to bring about that differentiation. For example, you can be, you are selling hair, but you also offer free consultation on how people can take good care of their hair. You are selling hair, but you also have a WhatsApp community where people learn how to take good care of their hair so that it doesn't spoil fast. And so just know what you can add to it so that people can get value. All right. Then finally, please embrace AI. The world is moving so fast. Do you remember those days when some churches would tell you, leave Facebook and face your book? If you to go, you go to hell, and all of that. But today, so many of us, our customers are right there on Facebook, and so we have to go to Facebook and find them, right? Our customers on social media, we have to go there and find them. And those who left Facebook, they have been left behind. So you must embrace AI. It's very important. AI has come to stay, and AI is changing how businesses are being done. There is no two ways about it. Let me tell you, there is no two ways about it. Whether you like it or not, AI has come to stay. And whether you like it or not, AI is changing how businesses are being done. You cannot change that. So what do? You embrace it. I don't like talking to people and they tell me I'm not tech savvy. This is not how I'm wired. Shut up. Which one is this is not how I'm wired? Nobody is doing things because that is how they are wired. Or you see someone, the person is telling you, I don't have passion for tech. It doesn't go for me. No, that is the essence of learning. The reason why we learn is because when we don't learn, we cannot produce. There is no productivity outside learning. You cannot be productive when you don't learn. The reason why you learn is so that you do what? You upskill. So if you don't understand anything about AI, go online, consume the same time we use in consuming irrelevant content, the same time we use to be arguing on Facebook, to be arguing politics that does not put food on our table on Facebook. That same time would be enough for us to learn certain things that will bring about changes in our business. So look at your business, study your business, and ask yourself, what can AI do in this business? What can AI help me do in this business? Trust me, there are offices that you are trying to hire people in that your business right now. You are trying to hire people, and you know you don't have money to pay them. You don't have money to pay them, right? And you're trying to hire people. AI can help you fill those gaps. The reason why AI can help you to fill those gaps is not so that you dismiss the input or the efforts of human beings. But when you cannot afford it, AI can help you do that. So because of time, I will be ending it here. If you want to learn more, maybe you can connect with me later. Thank you so much.
Thank you so much, sir. Thank you so much. I really do appreciate you. I especially like the fact where you said that we should give free advice, you understand, to create an audience, you understand, and invariably, the audience attracts money, you understand. Also, specifying our unique value proposition, you understand, which is the UVP, like you said, what makes us unique, you understand, and then you double down on it. Those type of things, those things actually results to making more money, you understand, or results to gathering an audience for yourself. Yes, and so I thank you so much, sir. Thank you so much for that. And now, while you even make more money, as you make more money, your tax is going up. So that's the reason why this this session is actually very important. So I am going to open up this. We are going to open up. It's Q&A time actually. So let's open it up to you. You know how we do it. When you have a question, if you have a question, you just raise up your hand, then I pick you, and then you can ask your questions. But first, let me confirm if our speaker is here. Miss Miracle, are you here? Miss Miracle, are you here?
Yes, I am.
All right. Okay, so please let's go on with our questions. If you have a question, please raise your hand. Please indicate if you have a question, both on the tax matter and on the branding matter.
I think someone has been indicating since here. The PEP Africa.
Okay. So the PEP Africa, please ask your question. Then after the PEP Africa, we go to Christiana Omotadi. Okay, so the PEP Africa, go on. The floor is yours.
Okay, yeah. Good afternoon. So my name is
Good
Sunday.
afternoon.
So the question is to Madam Oyemakin, is it Oyemakin Miracle or something?
No, Onyema Miracle, yeah.
Oyema Miracle. Sorry for the wrong pronunciation. So this is my question. Yeah, concerning the tax, I know it will start by next year, and that means whatever mixes have been done prior to 2026 January will not be factored into the tax process, if I'm correct. That's one. Then secondly, what if you are operating an account that is not linked to your company name? You open an account for a specific purpose with a name that does not offer any services, so to speak, or any product, so to speak. So, but there's always an inflow into the account. How can you? Does it have any effects to paying tax or not? So that's my question.
Okay, I'm not really sure I understand it, but let me ask Miss Miracle. Miss Miracle, do you understand it?
Let
Can you
me
help us?
let me clear what let me just clear what I understood by what he said.
Okay.
That you have an account and you are paying money inside the account, and the
Yeah,
money is for your business.
there's an inflow into the account. Yes, it's for the business, but there's a reason why the account was opened. There's a purpose for why the account was opened, but the account is not linked to my company, but there's an inflow in that particular account.
You know, but you put description that the description is for business.
Yes, the account name is a business name,
Okay, the
and
account
there
name
is
is for, and it's for business purpose.
it's for business purpose, but the business is not live yet.
Oh, it's not operation.
It's not
Okay,
operational yet, but there's an inflow in that particular account.
okay. I'll give you response before the end of this session.
Okay.
Someone else should ask.
Okay.
Then for the first question I asked, the first question that
Okay, sorry. Could you repeat the question?
okay, the question I asked that this new tax law will commence January 2026. So does that mean that whatever has been done prior to that time cannot be factored into what we happening going forward?
Miss Miss Miracle?
All right. So let's for the first question that he asked, that he's keeping money inside a business account, but the business is not operational yet. So first thing that we'll consider is, where is the income from? Is it an allowable income or a disallowable income? Do you get? So that is it. So let's say, for example, that you are keeping the money as for pension purpose. You see that it will not be taxed. But if you are keeping it as savings, it will be taxed. So that is, but so far the business is not in operation yet, and you said the business is not in operation yet, it will not be treated as a business account or business on a business purpose. It will be charged as personal income tax. So, but the money that you kept there before January 1st is not being considered, though. Hope you know. So the whole tax system starts from January 1st. So the one that was there before, they will not go back to historical facts. No, it's from January 1st. So what will I advise you now? From January 1st, put a description on that income. So go back to those things that I listed out as income allowed and income not allowed. put a description on that income. Do you get the point now?
Yes.
Yeah. So that is what I'll say.
Okay. Sorry, I'm still asking. Sorry if I'm still asking. So I believe the tax is on the revenue for the year,
No.
Yes.
or the profits for the year.
The tax threshold is on revenue, and that is the revenue that tells percentage that you'll be taxed. But taxable income is that income minus allowable deductions when you get it. So what you will not get is taxable profits. So it's possible that the profits you made and the taxable profit will not be the same thing. Do you get?
Okay. Yeah.
So when you
So-
do that, the income you earn for the year, the importance of it is to know the percentage that you'll be charged. That is all.
The income for the year, not the revenue that comes into the company for the year.
Revenue and income, they are the same thing.
Same thing, yeah. Revenue
Yes,
and income.
they are the same thing.
Okay, no, what I mean by for example, now I am in the logistics industry.
Okay.
Mhm. I'm the logistics industry, and in our industry, revenue that comes into your account is okay. Let's say
I think there's something wrong with the voice.
the
The
total money
voice,
that
the
comes into-
audio output. It's not. I can't hear anything.
Okay, hello.
Oh, sorry. Can every other person hear? If you can hear, please.
Yes, I can hear.
Yeah, we can hear.
Just
We can hear.
click off and come in again.
Oh yeah. She should. Yeah, I guess so. Yeah.
I thought I was the
Alright.
only one that noticed. The audio
Okay.
output is not it's not audible.
No,
I don't know.
no,
Please,
every
can
other
you
person- every
do
other
something
person
We
about
can
it?
hear
I think
him. I think it's from
every
your
other person
end. Maybe you
here
should log
is from
off
your
and
end.
come back again.
BB helps. Please, could
the
you log off
admin
and come
has
back
already
again?
muted themselves. Please, can you do something about it? We can't hear anything. Thank you.
Hello?
Sorry, please, we can continue. Let me sort it out in the message. Please
Okay, no
continue.
problem.
Continue with your
So what I
question,
was saying is, like, for me, I'm in the logistics industry, and the way
Okay.
our industry work is,
Missing it.
let's say 100% of the money that comes into your account as inflow, 90% might not be. It will be only 10% that will be a profit from that 100% inflow. You can have a revenue of let's say 200 million in a month, and at the end of that month, maybe your profits will be between 5 million thereabout. Because
I can hear you.
Yeah, because of the service fee that is expected from the customers being paid for an item that is being either sent out of the country or being brought into the country. Because most of the money does not come to you. Most of the money goes to the carrier that helps you to take that shipment either out of the country or bring that item in the country. And at the end of the day, your profit margin might be small from the money that comes into your account as inflow.
Okay.
So in that aspect, how am I going to calculate my tax?
Okay. Now let's use the example you already started with. You said 200 million
Yes.
revenue, right?
Yes.
So 200 million revenue. The threshold is that you'll be charged tax 25% as a company. So when we've ruled out the fact that you'll be so just as I said, that the revenue, total of the revenue tells whether you'll be charged tax or not. Then what will now be taxed is that your revenue minus allowable deductions. Then you will not get the taxable profit. If your taxable profit out of the 200 million is 5 million, you will now do 25% of 5 million.
Of
That
5
is your.
million. Oh,
You get. It's not the 200 million that will be taxed.
Okay.
It will not be 25% of 5 million. That is what will be taxed.
Okay. Thank
All
you.
right.
That's
You understand now, right?
yes. That's good.
All right. Thank you so much.
Sorry, sorry. I
Um,
want to just bring a little clarity. You know, can you hear me?
Yeah, we
Yes.
can hear you.
Okay, so there was an initial question he asked, and he said he talked about a business that is not operational, but then money is entering the account of that business. You know, first of all, before you open a business account, you've registered the business, and you are registering a business. As you are registering a business is assumed to have started. So we cannot have a case whereby you have a business that has been registered with CAC, because of course you cannot have a business account without your business being registered with CAC. So you cannot have a business that has been registered with CAC and then you also say the business have not started. So I mean for you, the business may not have started, but so I'm just saying that in the eyes of the law, the business has started. But now the only thing is the business making profit or is the business not making profit? The reason why I had to bring this clarity is because, you know, the essence of these questions we're asking is there are other persons here who might also, you know, we learn from these questions that we ask. So when you register a business, just know that you are literally telling the agency or you are literally telling the country, okay, so this business, I am announcing that this business is in existence and this business is an entity on its own. So it's assumed that the business is running and the business is functional. I don't know if that's clear.
yes. The Pep Africa. I hope this helps also.
Hello.
Yeah. Can you hear us?
Yeah, I can hear you.
Yes.
All right. All right. Thank you so much.
So
Let's move on to the next person. Okay.
wait,
Do you want
please
to
wait.
verify something?
Yes. What my boss said is right. I want to add a little thing to what he said. When you register a business, now in business we have commencement date and incorporation date. If you register a business, you have incorporation date. When you start, you have commencement date. So if you register a business and you've not started the business yet, what you are incurring is 0% tax because you don't have a statement, you don't have assets to show for the business. So what you are incurring is 0% tax. When you commence, the first year of commencement, you are not being charged tax. Some years, you are not being charged tax. But the way you are putting money inside that account that is not related to business, that is why I said there should be clarity. The reason we have accountants and auditors is that sometimes auditors come to your business place to know if that business is really functional or not before they will charge you. So if you're able to explain the source of that income, if you're able to say this is where this income is coming from, this is where it is coming from, if you're able to explain it, you will it will be clear whether it is for business or not. Okay, but what I'm trying to say is that there is incorporation date and there is commencement date. So that it's possible that you register and not start. At that point, you're incurring 0% tax, but you're incurring charges and levies from the state you registered in. So you're incurring this. But so far the business has not commenced, you will not be charged tax because there's no statement to show. There is no operation going on in the business. So that is what I want to add.
All right. The Pep Africa. Hope you understand properly now. Hope this also
Yes.
helps everyone too, Sha.
I do understand, but maybe
All
I
right.
have personal discussion with Madam.
All right. Let's move on to the next. Okay, yeah. Miss Christiana Omotade, please unmute your mic and speak. Thank you.
Okay, thank you very much. Good afternoon, everyone. Okay, so I have two questions, and then yeah, they are related to tax. So the first question is let's say there is a business owner has a registered um company, could be limited company, and then has a company account, let's say for instance with Zenith Bank, right? And then also has, of course, personal accounts in like the person's personal name, not in the business name now, right? And let's say in the course of business during the year, right? There are times where we have bank issues and stuff like that. So maybe because of one or two bank issues, customers were now asked to, like, instead of paying through Zenith Bank, had to pay money through the business owner's personal account. So how is that income that entered into the business owner's personal accounts being traced for tax purpose? That's the first question. I don't know if I should go ahead with the second question.
Okay, I think we should first answer the first question, because this first question now, it's something that every entrepreneur faces. When Nigerian banks, almost all the banks cannot be trusted because of network issues and the rest of it. So I think let's first answer this first question because it's really, really, really important. So, Miss Miracle, please, could you take us through this first question? Help us.
All right. So if you are preparing accounts for tax purpose, you bring all these things together. You bring all these things together. So that is why it is advised. Prepare your account, pay your tax, so that the government will not use their hand and start investigating by themselves. And you will not start explaining a lot of things. So if you prepare an account and you say that this money that is here is for meant for business, because as I said, it's income earned that is being taxed. It is income that is earned that is being taxed. So if the money that you put in your personal account is also for business, you put both of them together while preparing the account. You put both of them together and write revenue before you now remove the allowable expenses. So whether it is in personal account or your business account, except you are earning salary with that personal account and you are doing business with business account, these two are different. They are two different things. But if the both money, the two revenue you're talking about is meant for the business, you add the both of them together while preparing the account, do your deductions and all of it, and pay your tax ahead of time, so that when there will be no investigations here and there, and there should be descriptions. This is for this, and this is for this. Do you get? So once we know that your income is coming from this business and this business alone, you will be assessed for tax on that business. Finish. Do you understand it?
Okay, yes, I understand. Thank you very much, Lady Miracle. So, but what if the personal account, as you highlighted earlier, happens to also be a salary account? Let's say the person receives salary as well, owns a business, and then that particular account the person used to receive money because of bank issues happens to also be perhaps a salary account.
I will advise, if if it's below the threshold, if it's above the threshold of 800,000, I put all of them as revenue, as business revenue.
Okay.
You get? Yeah, put
Yeah.
all of them as business revenue.
Okay, you mean including the income from salary?
Yeah,
Okay.
you are earning salary from your business. Put it like that.
Okay. But what if the salary is from another source? Like you're an employee somewhere else. So you should put it as salary from your own business.
Yes.
Okay, thank you very much. Okay, so my second question, I'm going to try to paint a scenario of
Sorry. Let me just add a little. Let me add something. There is something that came to mind while saying this. because Miss Miracle said something about documentation, proper documentation. So I believe that when you're doing something like, let's say maybe you now use your separate account, your personal account for that kind of purpose, when you're doing the accounting or like you're trying to calculate your own tax from that your account, you could actually put that, you understand, as a, like, you document it also as, okay, payment received for business. Do you understand? I don't know if it makes sense, but I'm
Yes,
just like,
Yeah.
yes,
what do you
yes,
think
yes,
makes it also? So you could document it as, okay, payment gotten from this source. You understand?
yes,
So invariably, it's now your business money. It's no longer your own money. You understand?
exactly,
So it makes it deductible.
exactly. Yeah, you can put
Okay.
it as revenue for business. You can put it like that.
All right.
But an accountant will
Oh,
help you make it clearer so that you will not complicate the whole thing. No, we are looking for ways to reduce the tax.
Yeah.
all
Okay,
right. So
thank you
your
very
second
much.
question.
Okay, yeah. So my second question is about TIN, the tax identification number, because there are various, like, call it misconceptions or point of view about the TIN, okay, whether for companies or individuals. Okay, so I'm looking at maybe an individual who works with the private sector, and then even at that private sector, they remove a certain amount from the person's salary and say it is for tax, but then they don't use these people's thing to pay the tax. Like, the company just have a way of paying it, and they'll tell you that, okay, the deducted pay from your salary, and then give you the rest, right, as your net salary. So my question is, this thing, is it um is it compulsory for everyone? Is it going to be a prerequisite, for people to operate their banks and all of that? And then for this person working in the private sector, where perhaps a percentage was collected from their salary in the name of, okay, we are helping you to do payee. Meanwhile, they did not use your thing. How do this group of persons get to rectify these things? So I think that's basically my question.
Okay. So Miss Miracle.
Okay, all right. So first, TIN will be a requirement very soon for you to operate your account, according to what we are hearing. So I'm not in next year to know if it will work or not. So I can't say. But what I know is that according to what I'm hearing, that TIN will be a prerequisite for you to access your account. So, but I want to address the fact that your company takes the money, deducts the tax from you people. So when a company deducts tax by themselves from a business, they are now obliged to pay it directly to the tax officials. So before now, before this whole thing something came out, employers are being advised, collect the tax and pay for your employees. Do you get? So this is what has been going on before. So if they deduct tax from you, and it's very clear in your salary statement that tax was being deducted, the company is expected to pay that tax to joint tax board. Then coming to TIN, can you still hear me?
Yes, I can.
Okay,
Yes, yes, you can.
all right. So then coming to TIN, for personal income, earners, TIN is handled by joint tax board. Do you get? You will get your TIN from joint tax board. The link is on my Facebook page. I wrote a content on tax, and I included that joint tax board link where you can get your TIN from. So this TIN now, you can get it online. Then it will be sent to you. And all the necessary details, because if you don't put it, you will not get the thing. You keep going back and forth. At some point, they will not tell you to come to their office and all of it. Reason is because personal income tax goes to state government. Company income tax, for company owners, company income tax goes to federal government. So it's FIRS that you'll be dealing with. Once you register your business as CAC, as LTD, you'll be given a 10. But lately, they stopped giving out the 10 number. You now have to go to the FIRS office to fill some forms, make a little payment, is not much, then you will not get the 10. So if possible, do it within now till that 1st January. But if it's not possible, please don't pressure yourself. That is what I will say. So please just do these things as they come, so that whether you're a personal income earner or a business earner, you'll be on a safe side. You will not be running around. I don't have Tino, I don't have this one. Just get the thing and keep it. Link it to your bank. You get so, but whenever you see a deduction that is not meant to be, that is when you will not start running to tell them that this is not meant to be. Why will you take such amount of money from my account? There will be a lot of rifts between banks and individuals next year with this whole policy. So, but we have to be updated in our knowledge so that
Okay, thank you very much.
All right. Okay. So we are going to take one more. We're going to take one more question. Please, everyone should mute their mics. Thank you.
Okay. Hi, good afternoon.
Sorry. Okay. So we are going to take one more question, and then we call it a day. Then every other question will be directed to her later on or personally. Yes. And so the next question, we're going to take the next question. But firstly, Miss Christiane, I hope you understood what she said.
Yes, I did. Thank you.
All right. Thank you so much. Miss Chukuchino, so you have the
Okay.
floor.
All right. Thank you so much. Good afternoon, everyone. All right. So my question is regarding we the online learners in the tech industry and for people that owns ed tech startup. So I'm a freelancer in the health tech industry. I work remotely for international clients and earn in foreign currency, but I still withdraw to a gig pay before I withdraw to my Nigeria bank accounts. So I also launched an health tech startup academy this year towards a March. So it was last month that I had to register the startup with CAC as LLC, Limited Liability Company. So my question here is now that I own an health tech startup and I've registered the company. So in this case that I earn remotely and I always withdraw my money when I've withdrawn to another bank application before I withdraw to Nigeria accounts. So my question here is, should I channel my withdrawal to that account that then so that's account for my edtech startup, the one I have registered, and also that same account is where I receive payments for training for those that we train in my academy. So like kind of okay, this is where my tax, both my personal income and the business will be charged from, because I'm a bit confused here. That's my question.
okay, you have one account for both the business and your personal transactions.
I have a different account for personal transaction where I, like, for example, when I receive my payments from my foreign clients. So we have an application where we always withdraw the money to. So when we withdraw the money and when we make a withdrawal from the platforms that we earn from, so we now have to do a final withdrawal to Nigeria bank accounts. So now that account is his personal account. So now my question here is, now that I own an EdTech startup academy and is registered already with CAC as LLC, and I receive payments there too for those that wants to do training, that is where they send their payment to. So my question now is, should I stop withdrawing to my personal account and start using that remote tech collective business account to withdraw my money and also be receiving the payments for students so that the tax, everything will be charged from there? Like, I want to know.
Yes, Do it like that. Keep it with the business name account. Do you get? That's
Okay.
number one. Number two is that if you are not earning up to, so far as the business is registered and you're not earning up
Yes.
to if your revenue is not yet up to 25 million, you will not be charged
Okay.
tax. Do you
Okay.
get?
Okay.
You will not
Both
be
the money
charged
I
tax.
earn from my freelancing and for both from my academy.
It depends on what you prepare.
Okay.
The money you earn from your freelancing and your personal distance will be charged on personal income tax.
Okay.
Freelancers, content creators, YouTubers are charged on personal income. But
Okay.
since you said
Okay.
you have an academy that you registered as a
Mhm.
business,
Mm,
that
mm.
one company income tax.
Okay. Okay. So I should just channel everything there.
Channel your trainings and all of it. Yes, please.
Okay.
Let it be the
All right.
business account.
Okay.
Okay. So I hope you got you're satisfied with the answer. I hope you're satisfied with the answer, Miss Chukuchino. Sorry.
Yeah, yes, I am. Thank you so much. My network disrupted actually. So yeah, I get the question and yes, I get the explanation very well. So I'm satisfied. Thank you.
All right. Thank you so much. Thank you so much. I really do appreciate everybody. So thank you. That was actually a great set of questions. But because of time, we will not be able to like take more questions. Not be able to entertain more questions at the moment. But we will still drop out. Miss Miracle will shout out her social media account so you can hit her up and follow her there. You understand? So we thank you so much. And actually, it's also that time again where we tell our business owners that about SME bundle. You understand? Because we have a bundle where we have a bundle called SME bundle. So you don't have to keep doing everything yourself. You understand? So you don't burn out. You don't burn out, and you can still using proper metrics and not just guesswork. You understand? So we have different packages that helps your business grow to grow for the packages are for different levels of businesses. You understand? So it helps your business grow. So first one we have starter light package, which is like 50,000 naira. We have the starter pack, which is for 250,000 naira. We have the growth package also for 450,000 naira. Then we have the dominate package for 1.5 million naira. I've already left the link in the description so that you can um, check it out, and then you have the proper help your business needs. You understand? Come 2026. So also I want to thank Miss I want to thank Miss Onyema Miracle. I want to thank Miss Onyema Miracle for her practical insights. Actually, this session was really insightful, and I'm glad that everyone got their answers, their question answered. You understand? There was clarity in this session. Yes, and so thank you very much. I also thank the coordinator of this or the host of this program, Mr. George Naduzi. Sorry, please. Sorry. Okay, so Mr. George Nadeze, our boss wants to actually address us a bit before we close. So, sir, you have the floor.
Okay. Yeah, so I wanted to say this before we call it a day. In as much as what we talked about today is tax, I just wanted to advise business owners, if you have a business and you've not registered your business with CSC as a limited liability company, it's important that you do that. It's important to separate your business from yourself. There are so many benefits. And then if you registered your business as business name, I would still advise that um you upgrade it to a limited liability company. So there are so many benefits of separating your company, making it a different entity from you. There is a lot of benefit to that. And then if you have registered your business as a limited liability company, I also want to give a little advice. Make sure you file your annual returns. This annual returns was actually the reason why I made mention initially that the moment you register your business, it now exists as a legal entity. So once you register your business as a limited liability company, it now exists as a legal entity. And every year, you are expected to file your annual returns to make sure that the status of your business is still intact. So what is annual returns? Annual returns is not a tax. It simply means reporting back to CAC and telling them, for example, if you have made changes on your board of directors, if you've made changes on your business address, if you've made any kind of changes in your business, it's that annual return. It's in that annual return that you either tell them, okay, this is what and what we've changed, or nothing has changed. So it's important that you do your annual returns so that they don't put your business in inactive status. And if your business stays inactive for a long time, it's still going to affect your business on the long run. So whether your business is operational, whether you've commenced activity or whether you've not commenced activity, your business is already existing as a legal entity as long as you've registered it as a limited liability company, and you are expected to file your annual returns. Thank you.
All right. Okay, so I hope what he said actually helps every one of us. You understand? I hope it helps every one of us. So, I want to thank everyone. Thank you all so much for attending to this session. We are still going to have other sessions starting from January. We have it monthly. We have BrandSeries sessions monthly where we try to help businesses grow. Try to help businesses grow by inviting professionals to talk to us and help us in our various businesses. So thank you so much. I want to extend my gratitude to Mr. George Nadozie for hosting this program and enlightening every one of us. I thank you so much, sir. Thank you, Miss Onyema Miracle, for enlightening us about this serious problem, because I personally I didn't really understand this thing very well, but now I can confidently say I understand it. I can confidently say I understand it. So thank you so much. Thank you so much, everyone, and do have a nice and lovely day today.